All right, let's go into the trade ideas for the week. I only put one earnings on there, NVDA, because that's the only thing that matters for earnings this week. Brian, we're looking at a 10.5% implied move, which obviously is very high, but for a $1.6 trillion stock, have you ever seen anything like this?
Yeah, this would imply that what is that, $168 billion move in the market cap of a company off an earnings report? I mean, I don't know if I've seen a company move their market cap that much. Meta obviously was up huge. Maybe that is like a psychology in people's mind on what kind of movement NVIDIA can have. And really, NVIDIA is not going to be about fundamentals. It's going to be about their guidance and where they see the chip orders coming through based on AI and how much demand there is for that. But I mean, you look at the stock today, AMD, NVIDIA down pretty sharp today, which is probably leading the market lower. It's why you're seeing the NASDAQ off quite a bit on the day. And I wonder if the news is out, somebody's got the news somewhere or something that they're expecting NVIDIA to come in a little bit lighter than expectations. Does it
You're
make a
also
10%
seeing
move? I don't know.
the meme stock. It's not a meme stock, but it reminds me of meme stocks. The SMCI, the super micro, it's down another 10% today. So this is well off of its highs. Maybe that was a sign of these chips, these AI bubble kind of frothing up a little bit, because that stock was just at astronomical levels, over $1,000, up just crazy amounts in just a few months. So maybe that was a sign people got a little ahead of themselves in this space. We'll have to wait and see. This obviously is a critical earnings event.
Yeah, I mean, NVIDIA was in this sort of trend channel like you see here, where it was moving higher, it was in a nice channel. It kind of got a little exuberant, mean, stocky, kind of way. And so it got out of that channel. It broke out to the upside. And what tends to happen is you get this mean reversion back into the channel. And so I kind of want to play that there might be this possibility where it moves back into the upper end of this channel. But I also feel like a 10% or more move that the options are implying seems enormous, and I kind of want to take advantage of it. I'm not really typically a big person of selling wings into an earnings event, because all of a sudden you get, some sort of surprise and the market blows through those wings and it gets kind of scary. And then you got to figure out what to do. But here's maybe a very safe way to do it. Maybe take 1% of your portfolio. This is probably what I'd be looking to do, and like sort of my trading aspect portfolio. I'm going to do a time spread. So just listen tightly here because it's a little confusing. With NVIDIA around 684, I'm looking to buy the March 610 put. I'd pay $17 for that. At the same time, sell the weekly. This is an option expiring this Friday, selling the 610 put as well, but one that expires this week for $9.40. Net debit of $7.60. So here's what happens. If the stock drops below 610 before Friday and stays below there come Friday, I would be put to the stock, but I'd also have my other put protection against that, right? So if it then continues to stay below 610, the most I can lose on this trade is the $7.60. That's what's kind of nice. Like I'm selling some option wing, yet I'm sort of limiting my risk to the stock. If the stock moves higher, what happens? That short-term put just expires out worthless. I'm left with a 610 put expiring out in March, and I'm hoping the value of that put is greater than the $7.60 I'm going to outlay. So how does that happen? Well, typically it's when the stock moves higher, but not significantly higher. So maybe we get some back and fill from today. Maybe people are a little scared today. Maybe earnings beat a little bit than what expectations are, and the market rallies a little bit. But this is basically kind of playing the way I anticipated, about an $80 range in the stock post earnings. I expect this to be a winning trade. So that's kind of what I'm playing for. And I'm not risking a lot because I'm only risking that $7.60. So I can get some defined premium pay, figure out how to size this up. Like I said, if I'm going to spend maybe 1% of my portfolio, a 0.5% that I'm just willing to lose in case the stock just drops out of bed or just rips significantly higher, that's my risk.
Yeah, I think that makes a lot of sense to me, Brian. So remember, the average historical move is just 7%. We get an implied move of 10.5%. Your strike price is a little bit below that implied move. So if it moves a historical move down, I think you're going to be pretty happy with your trade. Is that about right?
Yeah, that would be the perfect scenario, right? The stock continues to sell off a little bit to the downside, but doesn't blow through that 610 strike level, which is right where the options are implying it'll get to. And then that put option expires to come this Friday. I'm left with the 610 put in March, which should have significantly greater value than the $7.60 I outlaid. So then I can go ahead and sell that March put. So this is one you're going to want to watch, and we'll keep you up to date on it as we sort of update our trades. Follow us on Twitter at Brian Stutland, at Joe Tigay, and keep up with us on social media on this trade.
Yeah, so you want it to stay above here by March, and then to trend down here after that.
Yes, that would be ideal for sure. But I might take it off before then. We'll see how it plays out and how the earnings look out.
All right. Well, that makes a lot of sense to me. One thing I know is that given the implied move here, being long at these levels is pretty risky. Obviously, being short at these levels has the same risk out there. So having an options position on in this earnings event really makes a lot of sense to me.